before I take you through the introductions of the experts we have with us today, I would like to request Mr. Manoj Kapoorji, who is the CEO of Taxorot Online, to share with us the features of this very powerful and useful tool. Over to you, Manojji.
Thank you, Anmol. Friends, today's session is very special because today is the red letter day in the history of indirect taxation because in the mission to ease of the business, government simplified the tariffs. And as most of you aware that almost 4 years back, Taxo introduced one of the most dynamic encyclopedia on the GST, which where you get the updated content on the GST case laws, tariffs, and updated act and rules. And for the knowledge for the all of you, we also develop the two utilities of the GST audits, which help your organization or your clients from future liability, GST liability, and the GST notices. I am not taking too much of time. Most of you aware about the my number. My number is 9891005210, and also putting my number in the chat box. If anybody is interested for the demo of the any of the product, please contact me. Okay, thank you very much. Now over to Anmolji. Please take today's session forward.
Thank you, Manojji. I'm sure that this tool is very powerful and it is helping us in many manners, in many ways. Coming back to today's panel discussion, friends, we have with us C. Atul Gupta ji, who is the past president of Institute of Chartered Accountants of India and is currently serving as the board member of International Federation of Accountants. Atul Gupta ji is a renowned name in the has a renowned name in the name of field of indirect taxation and has delivered more than 1800 lectures, including training to GST officials, and has authored many publications on indirect taxation. With his commitment to thorough research, diligent advocacy, and strategic thinking in the face of complex indirect tax challenges, he has been successful in various tax litigation matters up to tribunal level. Atul Gupta ji is a senior partner in Appellate Associates LLP Chartered Accountants and heading the indirect tax division firm of the firm. Then we have with us friend CA Upender Gupta ji, who is a 1990 batch IRS and recently retired as Chief Commissioner of CGST Panchkula Zone. Upender sir holds multiple professional qualifications, being a chartered accountant, cost accountant, company secretary, and law graduate. During his tenure of 33 years working in indirect taxes, Sir has led introduction of GST in the country in July 2017, and for his efforts he has been honored with Prime Minister's Award for Excellence in Public Administration and Presidential Award for Appreciation for Distinguished Record of Service. With this, friends, let us start today's session. Uh, Before we start, friends, I would like to request the panelists to our esteemed panel to walk us through the 56th Council meeting recommendations that were there, as we all know, that on 17 September, many of them were already notified. Meanwhile, you can enter your queries in the chat box and we'll take up the live Q&A session at the very end. So with this, let us start. Upendra sir, my first question goes to you, sir. Sir, please give us a brief of what the changes that were recommended in 56th GST Council meeting were and how they have been brought into effect by way of various notifications and circulars. Over to you, sir.
Thank you, Anmol. I would like thank Taxo for giving me this opportunity to present my views on the recommendations of the GST Council and the manner in which they have been implemented by way of issuance of notifications on most of which have been issued on 17th of September, effective from 22nd, that is today. So all of us are aware that the Honorable Prime Minister on the Independence Day have announced for the next generation GST reforms on 4 pillars: structural changes, rate rationalization, ease of doing business, and ease of living. So the the council has recommended. Am I audible?
Yes, sir.
So the
मीटिंग हो गई खत्म बेटा बोल चल रही
मनोज सर प्लीज म्यूट कर लीजिए सर
चलेगा.
So accordingly, the council has met and considered the report of the group of ministers on rate rationalization, as well as the report of group of ministers on insurance sector. and recommended many changes, large scale changes, primarily abolition of 12% rate and 28% rate, and shifting those goods or services to either nil or 5 or 18%. So it was also decided that the compensation cess would be abolished, but it will continue on pan masala for some more time, and those goods for the time would remain in the 28% bracket. So what has been issued uh, on 17th of September? 4 central tax notifications, 2 notifications relating to GSTAT, then 9 central tax rate notification, 1 compensation cess rate notification, and 1 circular regarding the post-sale discounts. Simultaneously, on various dates, 4 FAQs were also released by the CBIC. I am sure they must be on the recommendation of the council only. So I would like to discuss one by one. So what are the changes? So the changes which have been brought in law by way of notification 16 of 25, and primarily this notification gives the effective date of notification for the changes in law which were carried out in the through the Finance Act 2025, and the date to affect those changes, the changes in the law, has been notified to be from 1st of October. The important changes which have been made effective now, ISD provisions were already effective from 1st April 25. The one new trace and track mechanism was recommended by the council and included in the Finance Act. That has been now notified from 1st of October. Basically, this trace and trace mechanism, track and trace mechanism is for specified goods, primarily the tobacco products. Then vouchers have been the contentious issues. So the provisions relating to vouchers, as contained in Section 12 and Section 13, they have been omitted with effect from 1st October 25. Then there was a decision of Honorable Supreme Court in Safari retreat case, plant or machinery, plant and machinery. So that also has been was recommended by the council to amend plant or machinery with the plant and machinery, and that changes, although it is effective from 1st July 2017, but the notification has made it effective from 1st of October. So reversal of ITC on the credit note issued by the supplier. It was being implemented through notification 212 earlier, which provided for the CA certificate if the credit amount was more than 5 lakhs, and the undertaking from the recipient if the amount was less than 5 lakhs, because there was no mechanism available on the GST portal. So the Section 34 was amended, and that also is now effective from 1st of October. And I am sure as recommended by the council, the government would rescind notification 212, because now 34 would apply, amended 34, Section 34 would apply from 1st of October. Then certain changes have been notified in return filing process. Probably these changes are for implementation of IMS, which is presently working on an optional basis. So now this was about the changes in law effective from 1st of October, some of which, although the notification has brought those provisions with effect from 1st October, but some of them are with effect from 1st July 2017, and ISD provisions are effective from 1st of April 2020. So what has changed in rules due to these recommendations of the council? First is the annual turnover, like in the earlier years, the annual turnover, people having annual turnover up to 2 crores are not required to file their annual return. So they have been exempted. This year, the notification is worded differently, and now this notification will not be required to be issued every year because the notifications, this and until the tax having up to 5 crore will not be required to file it. Provisional in case of exports was already in place, but there were a lot of issues and grievances from the trade that they are not getting the refund. So on the recommendation of the council, section 91(2) has been amended with effect from 22nd of 22nd of September, so as to provide that the provisional refund would be given on the basis of identification and evaluation of risk. So what is expected now is that the GST portal would give risk scores to all the refund applications of exports, and low risk cases would be sanctioned without any discretion of the officers. How does this will work? Only time will tell. The council had also recommended to have similar provisions for IDS refund, inverted duty structure refund. So the amendments are yet to be made. Amendments have to be made in the law also, but council has said it should be made operational from 1st of November. So those changes are still to be notified. So today this uh, identification and evaluation of risk methodology is only for exports refund provisional basis, on provisional basis. So we have to wait for the IDS refund on similar basis. Notification has also been issued that provisional refund would not be allowed in certain cases. Notification 14 of 2025. It says that those taxpayers who have not undergone Aadhaar authentication, they will not be eligible for provisional refund, even for exports and suppliers of certain specified goods like areca nuts, pan masala, tobacco products, essential oils. So in these 4 or 5 commodity cases, the provisional refund provisions would not be applicable. The annual return form 9 and 9C, many changes have been made, like the changes are made every year. So those changes are for obviously the annual return for the year 24-25, which is to be filed by 31st December. There are many changes, and those changes are relating to reporting things only. But one major change has been done in Rule 9C. If one will see Rule 9C, it said that if there is any additional liability because it detected while filing 9 or 9C, then that additional liability could have been paid only through cash, electronic cash ledger, and not through electronic credit ledger. So if one read very carefully the 9C instruction for part 3, table 11, then now a subtle change has been made that the additional liability can be discharged through electronic credit ledger also. So this is a major relief to the taxpayers that additional liability can be paid through electronic credit ledger. Actually, it should have got much publicity, which I think has lost in the maze of rate changes and discussion there on what to be do, what not to do, and therefore this has lost. This has been lost. Then similarly, appeal GSTAT, as we are aware, is round the corner. So many forms have been amended, many new forms have been introduced by way of notification 13, through which the CGST rules have been amended. So at this point in time, I would also like to mention that something have been recommended by the council, but have yet not been notified. So what are those things which were recommended and which have not been notified, and we have to wait for those changes to be effective? As I said earlier, provisional refund in case of inverted duty structure. The council itself has said that it should be introduced with effect from 1st of November. Simplified system of registration of those taxpayers whose outward turnover is not more than 2.5 lakhs per month. That also is to be operationalized from 1st of November. So those changes are yet to be notified. Here I would like to say that probably, I don't know what system of simplified registration would come. But to me, it appears that simplified registration would be without Aadhaar authentication. So if this simplified registration is without Aadhaar registration, so people before opting for this scheme should consider whether they are into exports or whether they would be requiring refund of inverted duty structure. If that be so, then they will not get the provisional refund in terms of notification 14 issued on 17 September, as I had discussed earlier, because the registered persons who have not undergone Aadhaar authentication have been debarred from getting provisional refund by this notification 14. So one should weigh the pros and cons for going for the simplified registration process vis-a-vis the refunds. Then RSP based assessment of tobacco products was introduced, was recommended, yet to be notified. Then omission of section 15(3)(b)(1), where the discounts are to be passed on in terms of a pre-existing agreement, that was recommended to be omitted. That has not been omitted, and this omission would take time because this involves law change. If we can notice that the changes which were recommended last year and made through Finance Act 2025 have been notified from 1st October 25 only. So this also reminds, I think I have missed one major point, that the pre-deposit required in case of penalty alone. There was no pre-deposit earlier, but the 107 and 1112 were amended. So those penalty pre-deposit in case of penalty provisions also, they have also been brought into force from 1st of October. Export refunds up to 1,000 rupees. Law amendment is required in 5414. I think that will also take time once the CGST Act is amended. Then, as I mentioned, circular number 2112, 212 number circular has to be rescinded because 34 amendment in section 34 has now been made from 1st October. Probably this circular will be rescinded as recommended by the council, not yet done. Place of provision of service in case of intermediary was to be omitted, section 13(8)(b). This also requires amendment in the IGST Act. So this, I think, will also take time till the law is amended. And simplified registration scheme for a small taxpayer supplying through ECO. In principle, approval was given, but the proposal has to go back to the council, and therefore this will also take time. Here I would also like to cover this intermediary provision, because this was a long pending demand which has been accepted by the council. So now the intermediary services would be eligible for export refund because the place of supply will be the recipient place. But simultaneously, once this is removed, then the intermediary service, which if somebody is importing from abroad, then it would be subject to RCM because it will be treated as import of service. So what has changed for GSTAT? The press release issued immediately after the GST Council meeting has indicated that the filing would be opened, filing of appeal would be opened on GSTAT portal from before end of September. The hearing are likely to be commenced from end of December. Then, as I mentioned earlier, some forms have been amended. and some new forms have been introduced. One more notification has been issued on GSTAT that the last days to file appeal in cases where the order has been communicated before 1st of April 2026, the last date is to file appeal against those orders is 30th June 26, and those communicated after 1st April 26 within 3 months of the date of communication. Here I would like to mention that if because there is huge pendency of appeals which are likely to be filed before the GSTAT, and the portal is likely to be opened from end of September. Although the date to file appeal is 30th June 26, but we should not wait. If we have to file appeal, we should file immediately so that we get early personal hearings from the tribunal and we get reliefs and we get order immediately. So without waiting for the last dates, we should attempt to file appeal as quickly as possible, probably as soon as the portal gets open, and the likely date of which, as I said earlier, is end of September. Then certain new class of cases have been given to GSTAT, principal bench. Sorry. So what are those cases? We know that Section 109 subsection 5 provides that where one or more issues involve place of supply, that is to be heard exclusively by principal bench. Then earlier, by way of notification 18 of 2024, the anti-profiteering cases were also given to the GSTAT for hearing. And all of us are aware that few decisions of GSTAT principal bench have also been issued on anti-profiteering cases. Then the another notification issued on 17 September itself in relation to GSTAT has allocated 4 type of more cases to GSTAT. What are those? Where 2 or more cases involving identical issues pending before 2 or more benches of the state benches, 2 or more state benches. Those cases can be transferred to principal bench by the president. OIDAR services related cases will be heard by principal bench. Specified actionable claims provided from abroad for online gaming cases and casinos, if any. So similar cases which are categorized as specified actionable claims, they would be heard by GSTAT principal bench. ISD related cases will also be heard by principal bench. One more recommendation was made earlier by the council. I think in this GS 56 meeting itself was recommended that the National Appellate Authority for Advance Ruling. It was introduced through section 109C of the CGST Act. It has not been operationalized so far. So the council has recommended that the principal bench itself would act as National Authority for Appellate Authority for Advance Ruling. This is the authority which would hear the cases against the Appellate Authority for Advance Ruling in those cases where, in case of distinct person, 2 contradictory decisions have been given by 2 appellate advance ruling authorities located in 2 different states. So this was about GSTAT. Now, one circular was issued on post-sale discounts. So 3 major points have been clarified in this, that in case of financial credit notes or commercial credit notes, the recipient is not required to reverse the input tax credit. The second was that if there is no arrangement between the manufacturer and the ultimate consumer, so in that case, if the manufacturer pass on the discount to the dealer, that discount will not be added in the transaction value of the sale price of the dealer. And third is where there is a agreement arrangement between the manufacturer and the ultimate consumer, that discount would be added in the transaction value of the dealer. Here I want to mention that this is in terms of existing 15.3b1. So 15.3b1 provides that post-sale discounts can be allowed only when there is a pre-existing agreement about the passing of discounts. The recommendation of removal of 15.3b1 is yet to be notified, and that will happen, as I said earlier, after the law is amended, which will take its own time. So today this circular is in terms of existing 15.3b. So only if the disposal discounts is established in terms of an agreement, that this circular benefit can be availed. So now what has changed in services and what has changed in goods? Almost similar changes have been made. In services, 12% rate has been abolished. So whatever 12% item of rate of was there on certain services, it has been either shifted to nil or to 5% or to 5% without ITC or to 18%. So there is no problem when there is a rate change. 12 to 5, 12 to 18, no effect on ITC, but it brings other complications. In case of life insurance and in case of health insurance, it has been exempted. So it brings its own complication that the ITC reversal has to be made of the balance lying on 21st September. Proportionate credits have to be reversed. And in future, Section 17(2), Redwit 42 and 43 has to be followed with respect to the turnover of these exempted policies. And mind you, these policies are for individual, not for group and group insurance. Talking a little bit about hotels. So hotels, major change has been done. Room rent up to 7,500, 5% without ITC. Presently, it was 12% with ITC. So 5% without ITC means that ITC will not be available. Proportionate credits on the inputs, etc., lying in stock on 21st October has to be reversed, and in future rule 42, 43, Redvi 72 has to be followed. So because there is a dynamic pricing in hotel industry, then probably following 42 will not pose that much problem, but definitely following rule 43 would create a huge problem. Then definition of specified premises has been amended so as to provide that standalone restaurants cannot declare themselves as a standalone restaurant, specified premises. So they can't charge 18% with GST. They have to charge 5% without GST only. Then the local delivery services, which are used by the e-commerce companies for delivering their products, goods and services, they have been notified under Section 9(5). That means if those services are procured by ECOs from an unregistered person, then the ECO have to be paying the GST on local delivery charges at the rate of 80%. Now, as far as goods is concerned, so notification 1 and 2 has been superseded by notification 9 and 10. So what does it signify? Even those taxpayers whose products have not undergone any change, even they have to reconfigure their ERP system, their invoicing system, their POS system, because the schedules have undergone change. the entry number in schedules have undergone change, the notification itself has undergone change. So there also 12% has been removed, moved to nil, moved to 5 with ITC, moved to 5 without ITC, move through some cases to 18%, and in some cases, what has happened is that some goods have moved to 28% also, only the tobacco product. Tobacco products remain at 28% plus cess. Rest everything has been moved like motor vehicles, like aerated waters, they have been moved to 40%. One major change which has happened is abolition of compensation cess from automobile sector and coal. As I said earlier, compensation cess continues on the tobacco products. So what is the impact of abolition of compensation cess? The amount lying with the taxpayers as on 21st September would lapse because it cannot be used for payment of CGST, SGST, etc. because as per the provisions, credit of cess can be used for payment of cess only and cess is no longer applicable. So I would touch little bit in what is the impact of all these changes. So as I said earlier, if the rate has only changed 12 to 5 with ITC, 12 to 18, there is no impact on ITC, no reversals are to be required, nothing is to be done. Even if the rate has reduced and rate on output is less than the rate on inputs, still no reversals are to be done. ITC reversals have to be done if the goods or services have been exempted, or if the goods or services, the output rate is 5% without ITC. So in those cases, the balances as on 21st September has to be calculated and reversed in terms of 18.4, read with rule 44, and ITC 03 would have to be filed. So this is in respect of inputs lying in stock, inputs contained in semi-finished goods lying in stock, inputs contained in finished goods lying in stock, and the proportionate capital goods credit. And in future, from 22nd September onwards, the proportionate formula of 17.2 read with 42 and 43 has to be followed. So this would be complete new compliance requirement if you are engaged in both supply of both taxable as well as exempted goods or services. And exempted goods or services includes even those goods or services which attract 5% rate without ITC. So it would have impact on working capital. It would have impact on cost of claiming refund. It if there is an inversion in case of services where the output is supply of service, then the rule doesn't provide for inverted duty structure refund. Inverted duty structure refund is allowed only in case of goods and not in case of services. And there could be inversions and probably there could be inversion which would further deepen. So the product mix has to be examined, or everything has to be seen, that what are the old rates, what are the new rates, what is the ITC eligibility, what is the impact on cost, and so on. Applicability of new rate has to be determined, whether the old rate has to be applied or the new rate has to be applied. That is governed by section 14 of the CGST Act. As far as services is concerned, 2 out of 3 principle has to be followed. Service provided before, invoice issuance date, receipt of payment date. So if any 2 out of these 3 has happened before, that is happened up to 21st the old rate has to be applied. If any two takes place after 22nd, then the new rate has to be applied. As far as goods is concerned, this principle is not applicable because there is no tax on receipt of advances in case of goods. That was omitted by notification 60 of 2017, and this was applicable to all taxpayers except composition taxpayers. So in case of goods, the rate change is solely linked to the date of invoice, because the date of invoice and date of supply in case of goods is one day or same day, except in case of supply in case of lots, supply sale on approval. So generally it is same, only in exceptional cases it could be different. The rate of tax on debit note, credit notes is the rate at which the original supply has been made. So if the original supply attracted old rate, debit note, credit note would also attract old rate, and if new rate, then new rate. Is anti-profiteering mechanism applicable? Government has been saying that the benefit should be passed on. All of us would have noticed in newspaper today that a new campaign has started, GST Utsav, in addition to the auspicious fortnight which has started today. So government is very serious in monitoring whether the benefits have been passed on or not. Although section 171 relating to anti-profiting provision is there, but it has been said earlier that from 1st of April 2025, no new complaints would be entertained by the DG anti-profiteering. Having said so, we should be cautious that government is monitoring whether the benefits are being passed on or not. Government intention is very clear that the benefit should be passed on. And we have the trade and industry has said, and government is also saying that because of the market forces, the benefits will have to be passed on. And it is reputational issues also of the trade and industry, that we have got the rate cuts, but we are not passing on the benefits. So should the benefit be passed on only through reduction in rates, or there is any other method? So reduction in the value of goods is not the only method. One can increase the quantity of the in the packet, price remaining the same. That also amounts to passing on the benefit. So either way, the benefit has to be passed on. Return filing of September 25 has to be done very cautiously, because the rate changes are happening mid-month. So old rate up to 21st September, old entries, old notification up to 21st September, new things from 22nd September have to be reported. So return filing has to be very, very critical in this month. MRP regulations, earlier Consumer Affairs Ministry has said that the advertisement has to be taken out, new stickers have to be put. Now, wide circular of 18th September, they have relaxed all the conditions. Advertisement is not required. Changing sticker has been made optional. But the intention is that the benefit should be passed on in whatever manner you can pass on the inverted duty structure refund in case of goods, where earlier the rate was 12 and now the rate has become 5, particularly in case of the traders. Is it a case of inverted duty structure? The government has earlier issued circular 135, partially amended the circular, white circular number 173, and they made it very clear that this is not a case of inversion because the goods remains the same, notwithstanding the fact that because of rate change, the rate has reduced after a cutoff date. But there are 4-5 decisions on the subject of various high courts, all of which are available on Texo online, like Guwahati High Court decision in case of BMG Informatics. The citation of Texo online is 2021 Texo.online 954. Calcutta High Court decision of Shivako Associates 2022 Texo online 267. Rajasthan High Court in case of Baker Hughes 2022 Texo 648. Delhi High Court Indian Oil Corporation Limited 2023 Texo 1328. I believe one decision has come in 2024 also. So this is going to be a litigation area because the circular says no, this is not a case of inverted duty structure, but the various decisions said provide that the refund should be allowed. The government officers are bound by the board circulars, so they will not give. One has to go approach the judicial forums only in such cases. Valuation disputes are going to increase because up till now, in case of related party persons, in case of distinct persons, Rule 28 said that the invoice value would be regarded as the open market value and that would be accepted provided the recipient unit is eligible to avail full credits. Now, because of this inversion, because of the lower rate, because of the rate change, one has to carefully see whether the recipient would be eligible for full input tax credit or not. Then only they should apply Rule 28, take recourse to valuation under Rule 28. Another problem which is going to be hit by those taxpayers who are located in special category states like you know in Uttarakhand, they are northeast, they are eligible for refunds because they were located in the excise free area. So DPPIT of the central government and state governments were giving some portion as refund, but it was linked to cash payments of CGST and 50% of IGST in case of central government and SGST in case of state governments. Because the rates have reduced, in some cases the rate on inputs have not reduced, so the cash payment would get wiped out or would substantially get reduced. So the benefits which were being received through DPPIT or state government would be hit. And the last point which I want to make is that one has to thoroughly review the ERP systems, the invoicing systems, the MRP has to be revised, the POS systems, the contracts have to be reviewed both with the suppliers as well as the recipient, as well as the customers, because the tax rates have substantially changed. And if the supply is of two or more items attracting different rates, in that case, whether it would be regarded as composite supply or mixed supply, because it has huge implication, that has to be reviewed and the working capital impact has to be worked out. So I think that is all from my side. Thank you very much. Over to
Thanks a lot, sir. Of time we have a lot of changes that are recommended by 56th Council and majority of which are brought into force by on 17th of September. Now, I would like to request Atul Gupta, sir. Sir, kindly, in your vast experience of so many years working as a practitioner, successfully handling so many cases, kindly give us your point of view regarding the changes that have been brought in 56th Council meeting and notified. Over to you, sir. Sir, mute pe.
Thank you, Anmol. Very good evening, friends. And at the outset, thanks to the entire team for giving this opportunity. And Honorable CA Upendra Gupta ji, who deliberated and explained practically the entire gamut of change which are being recently introduced through the notification, GST Council, and other discussions which happened. My dear friends, I will just try to supplement some of the aspects which sir mentioned with the help of this small booklet or a PPT, which may give you more clear perspective of the changes which are recently being introduced. My dear friend, you are aware that there are many things where the rate reductions are there because we have now practically, other than on the bricks or maybe some one or two other items which I am not aware, that the rate will be 12%. Otherwise, there will be practically the two rates on most of the items, that is either 5% or 18%. Some of the items are there which still fall under the 28% or the 40%, being they are being treated as a sin goods or a luxury goods. Otherwise, by and large, the rates will be 5 and 8%, which will reduce a lot of litigation related to the classification issues, which are not being recently raised, but in the times to come, it will be the issue before the industry. Now, my dear friends, as far as the some of the important rates which I wish to highlight, the first one is the hotel accommodation, as rightly explained by Upendra sir, that now onwards the hotel accommodation will be under the two categories. One is less than 7,500, as you can see on the screen, where the GST rate earlier it was 12%, but now it will be 5% without ITC. Now here I have a small submission to all of you and a concern as well, that whenever we say that we have reduced the rate without ITC or we have made the certain goods as a nil rated, there are the obvious impact which the GST wish to remove at the initial stage, that is the cascading effect. Because whenever there will be a subsumation of the input tax will be there is a force that ultimately the business will continue to have the same profit margin, and there will be the chances, the higher chances are there that when they are subsuming the cost of the whatever the input tax they have paid, they will increase their MRP later or sooner because they have to maintain the same profitability which they are working for. So here is there is example. For example, because the hotel accommodation, if my hotel is of 7,000 rupees, earlier I was charging 12%, but I was eligible to claim the ITC. But now on the same, though I will be charging the 5% only, but by and large on my 5,000 rupees input cost, I must be continuing paying the tax at the rate of 18% or the 5% as the case may be. So that will be an additional cost which the hotel industry has to bear, and then they will certainly try to mitigate that how we can see that the profit margins will remain the same. Nevertheless, just to share with you that now there will be the two rates, and as rightly mentioned by Upender sir, that you cannot opt that okay, I will go with the 18% with ITC even if my price of the hotel accommodation is less than 7,500. Similarly, my dear friends, there is a benefit of the rate reduction in case of a third-party insurance of the goods carriage, nothing to do with that. Cinema tickets, if the price is less than 100, then only the rate will decrease from 12 to 5%. In the urban cities, normally the rate is of less than 100 rupees you will not witness any rate of cinema tickets normally. But yes, the beauty and the physical well-being. Now here again, there is a question, like for example, the gym. Now the gym earlier was 18%, but now it will be 5% without ITC. But as rightly again mentioning again and again Upenderji, that because he mentioned about the non-availability of the ITC. So if you are buying the equipments worth rupees 2 crore, paying the GST of 36 lakhs rupees, that credit will not be available to you. And that is something you have to subsume into your cost by virtue of a rule 43 or otherwise. That is something will be there as well. At the same time, there are certain increase in rate, like for example, business class, the earlier, now the rate of the business class will be 18%. In case of a transportation of goods by road with ITC, 18%, casinos and online betting, gamblings will be 40% ITC. My dear friends, I just wish to clarify you once again that the health insurance and the life insurance will be no tax. It is a complete exemption, but if it is there in the family only, then the benefit is available. For example, I am aware that the many professors and other colleagues are attending this program. For example, the one of my college, the Deen Dayal Upadhyay College, decide that okay, all the employees will be covered under the health insurance. Then this exemption benefit will not be available because that will be treated as a group which has a specific carve out from this exemption, meaning thereby that as a group, if you are taking the insurance other than family, then say for example, employer-employee relationship is there, then this benefit of a nil rate will not be available and it will be on a normal rate which is there. Then, my dear friends, coming to the tobacco products, which is already being covered by Upenderji. As I mentioned you that there are the certain industry benefit facilitation measures are also being taken. The refund, as we are aware that in case you are an exporter, you will get a 90% refund immediately if you are not falling under the risk category, risky exporter category. Similarly, for an inverted duty structure, the amendment is now being made. And one good amount is that a good introduction of change is there when the smaller refund, because earlier the refund of less than 1000 rupees was not allowed to be claimed, but now it will be available even to a low value exporter. And a new concept of a simplified registration wherein no Aadhaar authentication will be required, no Aadhaar authentication will be required, will also be introduced, subject to your output liability is not increasing more than 2.5 lakhs per month. So my dear friend, these were the some changes are there. Now here I wish to give you the, I wish to draw your attention on a intermediary services. My dear friend, you are aware that when you are acting as a consultant for an overseas supplier. So for example, there is an overseas supplier from Germany and he want to supply the goods in Gurgaon, and you are arranging as a consultant the client for him. So now there was always a question whether you are falling under the intermediary. Earlier it was called business auxiliary service, and your activity will be treated as export or not. But now, my dear friend, with the change which will be implemented next year only, once, because it is an act change, so it will be there in the finance bill only. But now the incentive you are earning from overseas, say for example, you are a university consultant or you are a business consultant, in those activities, the commission or the consultancy fees so received will be outside the ambit of the GST. It will be treated as export of services. But at the same time, I just wish to draw your attention that if you are earning the commission, it will be export of services. But if you are paying the commission overseas, you are an exporter, you are paying a commission to a German guy to arrange the order for you. In that case, it will become taxable. Earlier, right now, it is not taxable. But later on, it will become taxable as an import of services. Though once you will pay under the reverse charge mechanism, you will be eligible to claim the ITC if your activity is taxable or the embargo is not there. Say, for example, a hotel industry. If you are arranging the customer from an overseas location and you are paying the commission, so you have to pay the commission under the reverse charge mechanism. But at the same time, since the embargo is there to not claim any ITC, the credit will not be available to you as well. But nevertheless, that will be the situation. The GST Appellate Tribunal, certain changes, I will request Anmol because he is handling the litigation part. So he will explain you some of the part related to the litigation, but I will not touch upon. Now, my dear friend, I am giving you a table that, okay, what are the various items which got from 5 to nil and 12 to 5, which are important for a daily use, like UHT milk, the chana or paneer, pizza bread, khakra coming from 5 to nil. As you are aware that if it is nil, so whatever the input credit is there available with you, you have to reverse that. The 12% to 5%, the condensed milk, butter, cheese, dried fruit, sauces, and 18% to nil is paratha and other Indian breads. Likewise, my dear friend, there are the welcome changes in the healthcare sector because many medicines are classified from a 5% or 12% to a nil rate, which are severe critical drugs are there. Likewise, for a 33 specialized drugs also got exempted from the GST. And at the same time, there is a welcome change that the rest of all the other medicines are practically classifying now will be classified as a 12% to 5%. So all the drugs, medical grade oxygens, anesthetic, surgical instruments, diagnostic kit will now be taxable at the rate of 5%. It's a welcome change, which will give a lot of benefit to the patients and their family members to save a lot of money around this. My dear friend, likewise for the textile sector also, there are the amendments like a yarn and fiber, the sewing threads and other will come from 12% to 5%, textile material 12% to 5%, and carpets will also be 12% to 5%. My dear friend, here I just wish to draw your attention on the apparels because we are doing a lot of shopping for the apparels. So now in the case of apparels, if the price of the apparel, the MRP of the apparel is less than 2,500 rupees, then the rate will come down to 5%, whatever the rate was there earlier, but now it will be 5%. But if the apparel cost is So earlier it was 12%. Now it will be, if the cost of the apparel is more than 2,500 rupees, in that case, the rate will increase to 18% rather than it was 12%. So my dear friend, that is something very, very importantly. Passenger vehicles, the vehicles, you are aware that today, these days, you are getting a lot of discounts on the vehicles. Why it is so? Though the rate is increased from 28% to 40%, because earlier, apart from this GST rate of 20%, there was a cess also. So earlier the rate was 48, 49%, but now together, including that GST plus cess, but now it will come down to 40%. So practically 8 to 9% benefit will be there in case you are buying the motor vehicle exceeding 1200 cc, in case of a hybrid vehicle, or in case of a diesel hybrid vehicle, the capacity is more than 1500 cc. So in that case, the rate will increase from 28 to 40, but the benefit will be there again 8%. But in case of a commercial vehicle, the rate will come down from 28 to 18%. In case it is a motor vehicle, chassis, bodies, or the parts thereof. Agriculture vehicle, the rate has been decreased from 18% to 5%, specifically if the tractor capacity is less than 1800 cc. My dear friend, there are other changes which are related to the transportation services, like air transport, as I mentioned you, will increase from 12% to 18% in case of a business class. In case you are doing a transportation of goods by GTA, rate increase from 12% to 18%. Transportation of goods in container by rail will increase by 12% to 18%. And the petroleum products through pipeline. So you may not be discussing that. Similarly, the third-party insurance, multi-transport, I have given you the table. I believe that it will be useful for all of you. There is again a welcome change for a common man item, like the talcum powder, face powder, hair oil, shampoo. So madams will be very happy that you are getting a special rate, a reduced rate of 18% to 5%. So you can shop more because you have to pay less amount because of this reduced rate of 18% to 5%. In case of all this talcum powder, face powder, hair oil, shampoos, dental, toothpaste, shaving creams, and lotions, toilet soaps, toothbrushes, and all these things. Likewise, in case you are buying the tableware, kitchenware, and other utensils, the rate will come down from 12% to 5%. Stationery item also the nil rate. So the happy moments for students: pencil, sharpeners, pencil, crayons, pastels, drawing charcoals will come down from whatever the rate was there, but to a nil rate. And likewise, the bicycles, umbrella will come down from 12% to 5%. Similarly, there will be a further reduction in the rate from 12% to 5% for feeding bottles, handbags, sewing machines, and will be there. Agriculture sector I have already covered, so I will not touch again. And pesticides as well. And similarly, the handicrafts, you can see the pictures on the right side, that the wooden handicrafts will come down from 12% to 5%. And the other fabric crafts, metal crafts, also the rate reduction is there. My dear friend, welcome change in relation to the flats, because we are all the flat owners, flat buyers, and the property buyers. Because the cement rate has been decreased from 28% to 18%. So I believe that in the times to come, there will be a reduction in the property rate as well, as far as the benefit which is available to the industry. But at the same time, there is a small increase in the rate related to the earthwork from 12% to 18%. And also there is a small other increase of the rates are there. My dear friend, as far as the GST on the job works are there is a fundamental principle that if you are doing a job work for the umbrella, then the rate of the job work will be same, which is the rate of the umbrella as a goods. So now, since there are the reduction in the rate of the umbrella, printing, and other sector, similarly the job work rates also being decreased from a respective 12% to 5%, as the case may be. But I just wish to remind you that the job works which are being specifically mentioned here in this slide, the other job works, which is a residual category, the normal rate of GST was 12%. I just wish to highlight here. Now it will increase to 18%. So whatever the job work which are specified, the rate will be 12%, rate will be there. But otherwise, the other job works which are not specified, the rate will increase from 12% to 18%. That is something that you should be aware of, so that there should not be any kind of a missing or the omission on your part, that you continue to charge 12%. Then there will be a demand later on. For environmental, because we have to protect the environment, there are the reduction in the rate related to the treatment of effluent plant and the disposal of the biomedical waste from 12% to 5% as well. Papers industry also will get a lot of benefit, because there is a further reduction in the paper industry which is there. And I believe this booklet will be available to you on the online. So you can download this booklet just going on the website, and the benefit will be available to you to read this booklet entirely. For a hotel accommodation, I have already covered cinema tickets. I already covered betting and gambling, and this all beauty and wellness services. The further is there. My dear friend, as Upenderji rightly clarified that related to the valuation aspect, I just wish to give you the perspective that as far as this valuation aspect is there, there are the commercial notes, credit notes, which are so there is no reversal required for the commercial credit notes. But in the case of a normal credit notes where the tax impact is there, the benefit will be available only and only the other party will reverse the credit so taken, then only the benefit will be available to reduce your liability. So this is something that very importantly they have clarified further. There are the two further commissions or the discounts which you are getting. Number one is that in case you are buying a bulk. So what was the benefit was available that you will get a certain other incentive to you. So whether that will be taxable, the answer is no, number one. Number two, whether any agreement was required. So earlier there was a requirement that if you are getting a post-sale discount, there should be an agreement earlier. But now they have omitted that requirement. So there will not be any requirement of this kind of agreement there. Number one. Number two, that say, for example, you are selling. For example, you are selling a goods for 100 rupees, but your manufacturer is saying to you that you please sell this product to Mr. X for 80 rupees and I will reimburse you 20 rupees. Or you please organize some exhibition, I will give you the money. So for those kind of a money which you are getting from the manufacturer will be taxable as being explained through the circular number 251, which the Upenderji and other colleagues are talking about, so which was issued on the 12th of September. So this is something that you should be aware of, and I believe that you will not commit any kind of a non-compliance. My dear friend, there is another very important change which you should be aware of. So now what is happening, for example, I am a GTA provider or I am a truck owner, which is I am supplying the truck to a GTA. Now what was happening that in the case of a GTA, there are a lot of exemptions available. But let us say I am a practo, not a practo, I will say that this services which are being provided by the survey, like you call Anmol ji, kya kehte hain aap usko, like you are sending the goods from one location to another location.
Where to ship to?
No. I'm saying the service provider, the porter. Now, what was happening that in case of a porter services, for example, I'm a porter service provider, and I'm taking the goods from you and giving somebody as a local delivery. I'm supplying the local delivery. So the normal perception was that I'm falling under the GTA services, and since in the GTA services, it is the liability on the service recipient to pay the tax. The ultimately, because the service recipient is an individual person, so nobody was paying the tax. So practically this kind of a situation was there. But now, since these kind of activity has been carved out from the GTA services, meaning thereby they will no longer be a GTA, meaning thereby the normal provision will apply. And when the normal provision will apply, their activity will become taxable. So now, my dear friend, in case you are using certain services of e-commerce operator to supply goods in a local delivery, that will become taxable under the forward charge. So 18% tax will be there with the ITC available to them. That is number one. Number two, now I am a service provider to a porter, e-commerce operator. So who is handling this kind of activity? So I am a truck provider. I am providing the truck to Anmolji, who is a e-commerce operator, and he is supplying to, say, Upender Gupta ji. Now what will happen? The truck owner, so there will be the two leg of transaction. One is between the truck owner and the e-commerce operator, which again will be taxable. And if I have to take the registration because my limit is more than 20 lakhs, I will charge and the Anmolji will claim the credit of the same. But if I am not eligible to take the registration, in that case, Anmolji, as per the section 9, subsection 5 of the CGST has to pay the tax under the reverse charge mechanism. And then when he is charging from Upenderji, he can claim the credit. The third scenario can be that I am using the e-commerce operator activity and e-commerce operator is giving me lead, wherein I am supplying directly to Upender Gupta ji. Like these days, the restaurant services we are using from the various e-commerce operator. So now what will happen? That since my activity, I am providing directly the service using the e-commerce platform to Upender Gupta ji. In that case, the e-com operator has to pay that two type of tax. One for my activity, which is being directly provided to Upender Gupta ji, say 1200 rupees, and 300 rupees incentive which he earned on this transaction as a e-commerce operator, the facilitation fees on which also the e-commerce operator has to pay the tax. So practically in sum and substance, what I am trying to convey you, that since by virtue of this amendment, the e-com operator having this local delivery services has been carved out from the GSTA services, there will be a different tax regime which will be applicable on these kind of activity, which we should be fully aware of. So my dear friend, apart from this, there are the many other things are there. Notifications, many notifications are also being issued. There are these normal notification related to the central tax, and then there are the many notification related to the central tax rate. I just wish to clarify you two only points here. So you have to note down this point, that they have issued a notification number 9/2025 central tax rate, which has actually replaced the entire HSN notification of the 1/2017. Meaning thereby now you have a complete new HSN code available. Code will be there, but the complete new classification, or I will say the amended HSN, entire HSN, I will say the tariff is available to you by virtue of this notification. So you should read this notification very importantly. Keep this notification with your folder as a printed folder, that okay, what is this new tariff which is available to me through this notification number 9/2025 and 10/2025, which give the exemption on the goods. The another is that the amendment related to the services. In case of a GST, there are two notifications. Number one, 15/2025, which provides the rate change for the services, and 16/2025, which talks about the exemption notification related to the services, which are most important notification in this entire gamut. There are many notifications, but just to share with you the most important, which 4 notification which can help you. Apart from that, there are, as Upendraji mentioned, the one important change which I wish to say, and then I will close my deliberation, is related to the implementation of the penalty, the pre-deposit on penalty. So my dear friend, in today, what is the scenario? If you want to file an appeal before the first appellate authority or before the tribunal, your tax demand is 100 rupees, the interest is 40 rupees, and penalty is 100 rupees. So you have to pay the 10% on the tax amount, that is 100 rupees, that is 10 rupees. No pre-deposit on interest, and the penalty will be there. But in case, this is the present scenario. But in case there is a, say, for example, tax demand is 0, interest is 0, as per the section 122, you have a penalty only for 100 rupees. So whether you have to do a pre-deposit, the answer is no. But now from the 1st of October 2025, after this amendment is now getting implemented, even if only the penalties are there under section 122, you have to pay the 10% of the penalty amount as well. I'm not again saying that you have to pay the 10% on the 240, which was in my earlier example, the 100 rupees tax, 40 rupees interest, and 40 rupees penalty. No. On the 240, you are not supposed to pay 24 rupees as a pre-deposit. In that case, if the tax amount is there, then the 10% of the tax only. But in case the tax amount is nil, so from the 1st of October 2025, you have to pay. If the tax amount is nil, interest is nil, but only the penalty is there, then the 10% of the penalty also you have to pay for filing your appeal at the first appellate authority and the second appellate authority, as the case may be, or in both the cases as well. So this is something that you should be fully aware of. The Safari Retreat judgment, which was showing that you are eligible to claim the credit of the civil work, which was given the intention by the government that, okay, no, we will amend the law from a retrospective date. That provision also going to implement from the 1st of October 2025, meaning thereby the definition will change, meaning thereby the benefit of this judgment will not be no longer available to all of us. That is something that you should be aware of. Now, the certain aspect that how this accumulation of the compensation cess will be there before with the car dealers and all, what they will do, how the situation will be there when you are going with a lower rate or a nil rate, but the ITC credit is ITC, the tax payment on the ITC as a cascading effect will be there. Whether the inverted duty structure refund will be available or not, as the High Court says yes and the FAQ says no. And what will be the situation of a debit note, credit note, as clarified by Upendraji already. So these are the some aspects which will again bother us in the times to come, that okay, how we have to suitably represent them, so that the clarifications should come. And again, in a process of streamlining the entire journey, we will continue to contribute in the best of our capabilities. So with this, I complete my session, because I am aware that we are short of time already. It's 8:11, and Anmol has to give a very important, valuable feedback to all of you related to the Appellate ecosystem. So over to you, Anmol. I invite you. Please say a few words about the Appellate process and the amendments which are recently being introduced. Before we close in the next around 15 minutes time, apart from the Q&A, maybe 10-15 minutes you can speak, and then Upender ji can take up the questions as per the availability of the times. Over to you.
Thank you so much, sir. Thank you so much for explaining beautifully the changes that have been brought into force recently. So, friends, like sir mentioned, I'll quickly, not taking much of your time, I'll quickly walk you all through the recent changes that have been brought in with respect to the GSTAT appellate mechanism. So, the first change that has been brought by way of CGST Third Amendment Rules 2025, which has been notified, is regarding that under the GST law earlier. Currently, the law was that the filing of GST AT appeal can be done either electronically or manually if permitted by the registrar. So, this was the wording which was there in the proviso to relevant section. But now, rule. But now, as per CGST Third Amendment rules, that proviso has been omitted, which means that now the GSTAT appeal can only be filed electronically on the GSTAT portal. The second change that has been brought into force, there are minor changes which are not having much effect. So I'm just discussing the changes which are going to change the practice of GSTAT. The second change that has been brought in CGST Amendment Rules 2025 is earlier. For when you file an appeal, there is a provisional acknowledgement that is generated on the GST portal, and after removal of defects and everything, the final acknowledgement was issued under APL 2. But now the rules have been amended to say that for provisional acknowledgement will be issued under Part A of APL 02A, and final acknowledgement will be issued in Part B of APL 2A. So basically, APL 2A form has been newly introduced, in which Part A talks about provisional acknowledgement and Part B provides for final acknowledgement. Similarly, earlier the CGST rule says that the GST 80 order has to be a summary of GST 80 order has to be passed in APL 4. The first appellate authorities appellate order summary is also to be passed in APL 4. So to bifurcate the summary of first appellate authority order and the summary of second appellate authority order, the 4 has been converted to 4A with respect to GST 80. So now a new form APL 04A has been inserted in the CGST rules, which will provide for summary of the orders that have been passed by the GST 80. Further, the APL 05 form, which was the appeal that has to be filed by the taxpayer, APL 6 form, which is the appeal to be filed by the department, and APL 7 form, which is the APL 7 form, which is the appeal to be filed by the department, and APL 6 form, which is the cross objection form. These three forms have been substituted and new fields have been added. More particularly, if we talk about APL 5 form, it has been made a very detailed form. 5 annexures have been added. So the base has an capability against which we appeal before. For instance, have to fill the order against which we are filing the appeal, whether it is a demand order, it is a refund order, it is a registration order, it is an enforcement order, or it is a recovery order. Annexure B talks about the category of case under dispute. So it further deep down the category of order that you are filing the appeal against. Does it involve the issue of time of supply, issue of place of supply, issue of value of supply, applicability of the notification, and whatever column you are going to tick, you have to fill in the details of that section, relevant rule, or the notification number which the officer has invoked. Let's suppose the department is saying that you are falling under the clause of intermediary and your place of supply has to be determined as per section 13 subsection 8. So in that case, you have to tick mark the column of place of supply, and you have to in front of that column you have to write section 13.8 is the section that has been invoked by the proper officer while confirming the demand against me for against which I am filing the appeal before GSTAT. Then Annexure C has been added, which talks about the demand summary as per various levels. So If the demand which was proposed is 100 rupees, as per the order it is 80 rupees, as per the appeal order it is 60 rupees. So it captures the demand at various levels. Annexure D captures the details of the appellant. Annexure E, which is the last annexure that has been added to the appeal form filed to be filed before the GSTAT. It talks about basically if any one of you has filed the writ before the High Court, the writ format usually has that event happened. So annexure E is a similar statement of facts or case history that has been added, which simply contains a chronology of events that are involved in the order or the proceedings against which you are filing the appeal before the GSTAT. Then, friends, there are two changes which have been two things which have been notified separately via two notifications number 4219 dated 17th of September. As on by notification has been binds the exclusive jurisdiction of principal of GSTAT as per the CGST Act read with CGST rules. Already two scenarios are there wherein there is an exclusive jurisdiction of principal bench of GSTAT, meaning thereby only principal bench of GSTAT can hear those matters. One is and the anti-profiteering cases, and the second is the places which involve the place of supply, the issue of place of supply, the litigation regarding the place of supply. These two cases are already defined in the CGST Act read with rules to determine to show the exclusive jurisdiction of the principal bench. Along with this, the third scenario that was given in the law, that other class of persons or cases as may be notified, that has been notified by way of notification dated 17th of September, which covers two scenarios, four scenarios, I would say, instead of two. One is where the same question of law is pending before two or more state benches. So basically, if let's suppose whether a particular service is taxable or not is pending before two or more state benches. It is pending before Maharashtra state bench as well as Gujarat state bench. So to avoid any contradictory decisions on the same issue by the two benches, that case can be taken over by the principal bench of GSTAT, and decision may be given by the principal bench of GSTAT. Other than that, three sections have been notified that if the dispute revolves around these three sections, the exclusive jurisdiction will lie before the principal bench of GSTAT. One is Section 14 of IGST Act, which talks about OIDAR services, Online Information and Database Access Retrieval Services. Second is Section 14A of IGST Act, which talks about actionable claims supplied by a person located outside taxable territory. And the third one is Section 20 of CGST Act, which talks about ISD mechanism. So if your dispute is related to these three provisions, if your dispute is related to ISD mechanism, that the department is saying that you did not follow the ISD mechanism, in that case, that issue will lie before your appeal will lie before only principal bench of GSTAT, irrespective of the fact that you fall under, let's suppose, Maharashtra jurisdiction or MP jurisdiction. Then the other notification, the last change that I'm going to discuss, the other notification that has been brought into effect with effect from 17th of September 2025 was as per the recommendation of the 56 GST Council meeting. All the appeals against the orders which have been received by the taxpayer before 1st of April 2026, which means on or before 31st of March 2026, the appeal against those orders will have to be filed on or before 30th of June 2026. So they have given you the government has given you sufficient time to file the appeals of all the pending matters of last 8 years. You can file till 30th of June 2026. But all the cases in which the orders are received on or after 1st of April 2026, the time limitation as prescribed in the GST law, which is 3 months for the taxpayer and 6 months for the department, that will follow, and the appeal has to be filed within that stipulated time period. So friends, this were the changes that have been brought with respect to GSTAT as guided by Atul sir to be discussed. I hope I have explained the changes in a summarized manner given the paucity of time. Now, with the permission of Upendra sir and Atul sir, I would like to discuss take some live Q&A session, though we are already beyond the time limit of our session, but I'll quickly take some of the questions. So first question, Sir, you're trying. Sir, you are on mute, sir.
More like what I'm trying. Let we read the question ourselves and Upender ji and you and me, whichever the question. So maybe I will cover three, four questions first, and then we'll hand over to Upender ji. Upender ji may scroll down and see because otherwise it will take more time.
Okay, sir.
Yeah. So first question I am taking, and we can close that question so that it will now will not be visible. Manish Sharma ji is asking a question that the hotel accommodation reduced from 12 to 5. So during peak season, it will may again increase back to more than 7,500. So just to Manish ji sharing you that since there will be the two rates now, wherein you are falling under 5% without ITC and more 18% with ITC. So you have to go with the rule 42 that the proportionate credit will be available to you based on the formula given in the rule 42. So that permissible, there is no requirement, there is no worry at all because you will be fully compliant with. So that is something that just to share with you. As far as the Sayyid Jia Abbas Rizvi ji, that lotion of 5%, what about the body lotion used by ladies? So I believe that all the lotions, all the items which are similar nature are falling under the same category. Though HSN, one has to see the lotion in case it is a separate category of the body lotion for ladies. Then one has to see the tariff, which I just mentioned you. Similarly, there is another question from you, face wash and face pack. Again, whether they will fall under the soap, the answer is normally yes, but one should see the tariff before concluding. As far as the Rakesh ji is asking a question, sharing PPT. So I believe that this entire booklet which you have mentioned is available on the portal of the Taxo. You can go taxo.online and you can download from there. There is a so you can very well. In case you are not able to because of certain reason, then you can just WhatsApp me and Molji and anybody else. We will provide you or Manoj ji. Manoj ji has given your number on the chat box, so that you can do. Rajesh Advani ji, you are talking about the local delivery three situations. I have already covered. Again, I will request you if you can WhatsApp me. Anmol can write my mobile number on the chat box so that you can WhatsApp me because it will take a lot of time. Just to share with you that there will be the three situations. One, that the e-com operator is directly providing the local delivery services to the customer. The second one is by their own vehicle. The second one is that they are hiring the vehicle and then providing. And third one is that the transport operator is rendering on service on behalf of the e-commerce operator. So there will be the three situation, and based on that, the taxability will be the tax provisions will be determined. But normally it will be the 18% which will be there. Any relation bricks, is there is any change? Maybe something specific was there, anonymous attendee. But I can't say that the why this there that continues to be in the 12%, though the send bricks will come down to 5%, as I explained you. So that will be there. Then maybe fastly what I can answer the questions. Whether there any change of RCM in import of services under GST 2.0? There is no change other than that, as I mentioned you, that if you are paying commission overseas, once the law will become, then you have to pay the RCM on that import of services, whatever the commission you are paying overseas, that will be there as well. Then maybe fastly, I'm just checking that small questions. Big question I'm keeping for Upender sir only. So I'm just trying to reduce the number of questions. Post-sale discount, Sayed ji, as I mentioned you, there will be the two type of post-sale discount. One is a bulk discount. If you are buying in a bulk quantity, you are getting, so after certain period, you are getting some discount. So that will be continue to be non-taxable. But in case you are getting some reimbursement from the manufacturer on account of that you are paying, you are selling on a specified rate, reduced rate because of the certain reason, and you are getting the money from the manufacturer, or you are doing some activities like exhibition, participation in the exhibition, and you are getting certain discount post sale. In that case, those discounts will be taxable, as I explained you. So these are the two aspects which are there. Now, hand over to you, Anmolji, so that Upender sir will be able to. So face back and face wash already covered. So I will remove that. Why no substitution of notification for rate of service? So just to share with you, Rajeshji, that since there are only few changes are there, and so they have not amended the entire notification. They have given only the amended, like what are the amendments. But because the tariff not only 397, but because of the subheadings are there, so there may be the thousands of changes which are there, and that's why they have given a revised tariff to you through the notification. So that's why I believe is there. Uh, uh, Over to you, Anmol. There will be many questions. Uh, Hello.
Yes.
So now you
Upinder
can
sir,
continue.
Yeah.
should I
No,
ask, sir?
I'll also, I think I'll go from the top. I don't know whether it is
Okay.
top or bottom, but like second question is notification 9 of 25, the rate for 3003 has been reduced to 5. What about 3039090 at 6-digit level? So, just because it is at 6-digit level, 8-digit level, it will become 18%. No, you have to see whether this item falls in any other schedule, schedule 2, 18 of 18%. I don't think that the rate would be different, but you have to see whether this heading is in schedule 2 or not. How to close this, Anmol, that I don't know.
I
Anmol
will
will,
close.
Anmol will do
I
so.
will close, sir.
Okay, that you can close. So next question is from Mr. Arpit Khanna. What are the parameters considered by the tax authorities to evaluate the uh, risk profile? So risk profile, the parameters undergo change regularly depending upon the third party information, the your compliance mechanism, the compliance status of your suppliers. So it is a dynamic process. And what I understand is that for this, the GSTN uses the machine learning, not the artificial intelligence, but these are based on the machine learning. So, and they are not known to anybody. I mean, nobody can tell that I know what are the risk parameters, and that is the beauty of the risk profiling, that nobody can know this. So the next question is from Mr. Krishna Gupta. Will the provisions of 18.3 apply on compensation cess for stock? Then he said it should be read as 18.4. I think I had covered in my present talk that 18.4 would be applicable even on compensation cess. So actually, one should be very careful while reading 18.4. 18.4 says that the inputs lying in stock, inputs contained in finished goods, inputs contained in semi-finished goods. So first distinction is it talks about inputs contained, whereas section 16 allows the ITC on inputs used. So there is a difference in the term used and contained. Contained is actual content, whereas used is it gives the credit even on wastage during the manufacturing process. Secondly, the balance shall lapse, and if there is any shortfall, it has to be paid in cash. So that is what is important to note, that it has to be uh, that read that way. Then Mr. Babu question is, I'm selling only a product which comes under inverted duty structure and eligible for refund. In this case, also, if I have a part of ITC because of services, can I claim refund of those ITC? I believe that 89.5 now include the ITC on services. Please correct me if I am wrong, Anmol. But if you are providing output services, then only there is a restriction. I think that is my understanding,
Yes,
that
sir.
it would be included. Am I correct?
Yes, sir.
So the next question is from Mr. Sanjay Gupta. How a merchant exporter can refund of nil rated exports, or can the manufacturer who has sold the goods to manufacturer can get the refund of input credit? I think uh, this problem was already there. But I am not sure whether that problem has been resolved. So, uh, will you like to say on this, Atulji? So, I think this merchant nil rated goods, exempted goods, refund of ITC has been a problem earlier, and I think it has not been resolved even in this. Then another question is that if the product is nil rated, will the job work will be at zero? If we get pencil made on job work, will it be at zero rate as pencils in nil rated product? I don't think it is this will be the case, because we have to see what is the applicable rate on job work. At most of the job works, the rate has been reduced to 5, except I think in one case where it is 18%. Then Mr. Chetan Jain, whether reduction in price can be in the form of substituting the benefit in the form of reduction of actual price with any other form, like increase in volume or weight. That is what I said earlier, that the benefits has to be passed on, not necessarily by reduction in the value, but by the increase in the quantity. And you have to keep the records. If somebody afterwards wants to see that you have actually reduced, you should be able to inform.
Sir, I have another session, so can I leave?
Yeah, please.
Thank you, sir.
Thank you. 18.4 or Ravi Kumar ji, 18.4 or 17.2, which applies when? When one product exempt, what about other taxable products? 18.4 applies in case of where the goods were earlier taxable and now becoming exempt. Whereas 17.2 starts right from beginning when you are engaged in supply of both taxable and exempt. So if in a crude manner, if I say 18.4 would be applicable on 21st of September, whereas 17.2 would be applicable post 22nd September. Whether the risk-based evaluation to grant provisional refunds also apply to exports made with payment of IGST. The risk-based evaluation is for provisional refund of all cases, whether with payment of GST, because wherever provisional refund has to be given, it will be applicable. And from it will be applicable even on IDS refund, probably from 1st of November, as has been recommended by the council. I think, Anmol, we have sufficiently answered.
Yes, sir. Of course, there are a lot of questions, but given the time paucity, we are constrained to answer a few of them only. There are questions I can see with respect to the GSTAT. I will quickly answer those questions. One question is from Mr. Chetan Jain, whether there will be any virtual hearing before GSTAT and whether there is any restriction on number of hearings before GSTAT. Yes, the answer to both the questions is yes. With respect to virtual hearing, Rule 115, Sub Rule 7 of GSTAT procedure rules says that the hearing can be done either in virtual mode or in physical mode as may be permitted by the president of the GSTAT. So it can be done in the virtual mode if the court may so permit. With respect to the restriction of number of hearings, there is a major change that has been brought into GST law from the erstwhile service tax law. In the CSTAT, there was no limit of adjournments that can be taken by the assessee. Now there are only 3 adjournments that can be taken by the assessee. Similar to adjudication or first appellate mechanism, only 3 adjournments can be granted by the GST appellate tribunal. This will ensure that cases are timely disposed of, because we see at the tribunal level currently that some cases are being adjourned for 1.5 years continuously, either on the request of the assessee or on the request of the department. It remains unclear in the GSTAT that these 3 adjournments are combined adjournments from the department's advocate as well as the assessee's advocate, or this has to be computed singular on a singular basis. Only time will tell how it will play out. But yes, the number of hearings are restricted now. The second question that is there from Mr. Krishna Gupta ji, what is the difference between serial number 5 and 12 of APL 5? These two serial number basically contains the details of authorized representative, and it appears that these are the same only. But as you know that for the other forms also, these forms you don't have to manually punch in and upload on the GST portal. These are the forms which are already available on the GST80 portal, and you just need to punch in the details. So we believe at the time of making it live on the portal, if it is a mistake, it will be removed, or if it is not a mistake, it will be clarified. As you can see in the serial number 5 also, the word used is applicant, but form APL 5 is the appeal form. So it should not be applicant, it should be appellant. So I believe at the time of actually implementing these forms into the portal or the server, these things will be rectified, whatever there is, or it may be clarified that why they are asking for two separate details of the authorized representatives. The time will tell again. So, friends, with this, we come to end to today's wonderful deliberation. Would like to thank all the participants for coming out in huge numbers. Would also like to thank the esteemed panelist, Upendra sir, and in absentia, Atul Gupta sir, for giving us a very beautiful insights, for summing up very beautifully the entire changes that have been brought in GST 2.0. And at the very last, would like to thank Team Taxo for organizing such a wonderful discussion today. Thank you so much, everyone.
Thank you, Molly. Thank you, Upendra sir.